All right, hi everyone. Welcome to today's webinar brought to you by IronFX. Today's session is going to be on the live trading. I just want to make sure you can hear me loud and clear. And you should see my screen as well. You should be looking at the front page of the presentation slides, IronFX webinar series live trading session. All right, if you have any questions along the way, do not hesitate to drop them in the Q&A box or the chat box as well. I'll be more than happy to go through any queries that you may have. All right, hi Wayne, hi Reese, Walter, Paul, Andreas. All right, glad to have you all tuned in. All right, so I guess audio is all good, right? Yeah, okay, so audio is all good. Then let's get things going. All right, okay. Before we start, I do take note of the risk warning that comes with trading Forex and CFDs, right? The products that are traded, these products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Also take note of the disclaimer that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. All right, so my name is Ketan Ramachandra. So this webinar series is brought to you in special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so before we dive into the charts and trading view, let's take a quick look at what's on the calendar, on the economic calendar. We just had the Swiss National Bank release its monetary policy statement. We've also got the Bank of England coming up today, and we've also got US unemployment claims up as well, right? So the SNB or Swiss National Bank dropped their monetary policy statement at 8:30 a.m. GMT time, just I would say half an hour ago, right? Where they unexpectedly cut rates, right? There were estimates for many analysts had predicted that they would keep their policy rate on hold at 1.75%, but instead we had a surprise cut. So of course, when the Swiss National Bank cuts their policy rates, the Swiss franc is likely to weaken. So we'll take a look at the dollar franc as well immediately after this, right? It's probably be good to see how that currency pair is currently trading. Then of course we had the press conference in which should be starting right about now at 9 a.m. GMT time. And then we've also got the Bank of England later today at 12 p.m. At 12 p.m. GMT time. And then we've got unemployment claims at 12:30. Yeah, that's right, Andreas. Yeah, I think many people were caught off guard, whether you were a trader, investor, or an analyst, right? I think many people, I think tons of people were caught out on this one. All right, okay. And there's a bunch of other stuff as well, but of course we can't go through every single data point here or data release. We just cover the key ones, which was the S&B monetary policy statement, and then we'll also do the analysis on the pound as well. We'll take a look at how the pound is trading prior to the release of its monetary policy statement at 12 p.m. GMT time. And we'll also look at unemployment claims as well. Right, so unemployment claims is a metric that's pretty important. It can have quite significant short-term impact on the direction or on demand of the US dollar. So that would naturally impact the dollar index and of course all the other major currency pairs. So unemployment claims are basically the number of people that are filing for unemployment benefits in the US. So this is a daily metric, this is a weekly metric that of course gets released every Thursday at 12:30 p.m. GMT. Right, so the blue bars are the results, the actual result of that particular week, and the orange bars are the estimate. So generally, when the actual result or the number of claims come in lower than the estimate, this is typically bullish for the US dollar because you have less people than originally anticipated that are filing for unemployment benefits. Conversely, when the result is greater than the estimate, that means you have more people filing for unemployment benefits, and this signals a potential slowdown in the US labor market, which then has a knock-on effect on the US dollar, so less demand for the US dollar. That means that would generally translate into a lower dollar index, and of course the other currency pairs would react accordingly. Right, so for this week, we have a estimate of 212,000 claims. And in general, since the end of January or since early February, unemployment claims have been trending lower. Of course, you can see it dip down and then pull up, but dip down again. But generally, the overall trend does seem to be heading lower. And not only that, uh, the actual claims number has come in lower than the forecast for majority of the recent data points as well. So what this signals is a resilient US labor market because you have less people filing for claims. The number of people filing for claims is trending lower, and it's also been coming in lower than the estimates for most of uh, the recent data points. So generally, this would function as a short-term bullish catalyst for the dollar index, right? So this is how we can interpret the data, right? As once again, we have a data of estimate of 212,000 for this week. So if the actual result comes in higher than 212,000, that means there are more people filing for unemployment claims or unemployment benefits. This is typically going to be bearish for the US dollar, and that would naturally mean currency pairs like the euro, pound, Aussie, and Kiwi, and of course the commodities like gold will rise. Conversely, if claims come in lower than the forecast of 212,000, so that means you have less people filing for unemployment benefits. This will typically be bullish for the US dollar, and that will translate to currency pairs like the euro, pound, Aussie, and Kiwi falling along with gold prices as well, right? So this is how we can easily interpret the data. Pardon me. All right, okay, so with that, let's move on to the charts onto trading view, and let's start off with dollar franc, right? Since we just had the SNB cut its key policy rate half an hour ago, and we've also got the chairman, I believe it's Thomas Jordan, making his or delivering his press conference at the present moment. All right, so let's take a quick look at, or well, not quick look, but let's start off today's analysis by looking at the Swiss franc. So as you can see, okay, let's just maybe go down into the 30-minute time frame for this analysis for now, right? So you can see, just let me put this on GMT time as well, so we are all in sync. Right, okay. So this was released at 8:30 a.m. GMT time. So that's this current candle here. As you can see, it is 8:30 a.m. GMT time. Prior to that, dollar franc was trading around 88.50. And you can see it just skyrocketed, right? In a matter of minutes, it just skyrocketed. If you look on the 5-minute time frame, you can see like literally the first 5-minute candle at 8:30, boom, it just went up. It's pulled back a little bit over the last 20 minutes or so. And it does look like it's going to push higher as we speak. Right, so it went from what 88.50 prior to the release to go as high as 89.70, so 120 pip jump in a matter of minutes. Right, okay, so with that, let's go back onto the 4-hour time frame and perform our analysis on this currency pair. So with a surprise rate cut by the Swiss National Bank, we can expect the Swiss franc to weaken today as well, uh, to continue to weaken for the rest of the day, right? So in terms of support, let's start off with the support level, right? You can see price finding a decent support level here earlier today, right, at 88.50. And if I drag it across, this also is an overlap level, right? We can see price running the resistance here on 14th of March. Then, of course, it broke higher. Then today, it found strong support here to reverse to go higher. So naturally, this is where we're going to identify our first support at 88.49. All right, with regards to the second support, there's a pretty decent level here, right? When I look across this price level here at 87.41, right? This is another decent pullback support level, right? With price finding support, bouncing off this level here on 22nd of February. Then again on the 8th of March. So 87.41 will be our second support based on the 4-hour time frame. Right, okay, what about resistance? Right, let's zoom out a little bit. Okay, let's zoom out onto the daily time frame first. And let's see where the next resistance could really come in. All right, so in 31st of October, on 31st of October 2023, as well as in mid-November 2023, you can see the dollar franc retraced a little bit higher in this part as part of this strong downward move. It was retracing higher, and each time it ran into resistance around here at 91.05. in October or end October, and at about 90.40 in mid-October. So this does look like to be a pretty decent pullback resistance level, which is something that we can probably use to uh, ident in- uh, identify as our first resistance on the current analysis. Right, second resistance would be this swing high here, or this pullback here that occurred in at the end of October 2023. Right. So second resistance is at 91.04. First resistance is at 90.28. Right. Okay. So as you can see, this is a pretty strong move here, and even on the daily time frame, right, we can see that this is a nice ascending trend line. We've got a nice ascending trend line with dollar franc bouncing off this trend line twice. First on 1st of February, and then last week, in the middle of last week as well, right? So price has bounced off this level twice, signaling that this is a pretty significant ascending trend line. And also we saw price bounce off this overlap level here at 88.50 today. So it does look like it's going to be racing towards the first resistance at 90.28. Right, so let's move on over to the 4-hour time frame. Right, so should you have any long dollar franc positions, perhaps you decided to go long just before the announcement was made, right? You can target the vicinity of 900 all the way to 90.30 as a potential take profit zone, right? You don't have to take it all the way up towards the first resistance as well. I think anywhere between 900 900 all the way to 90.30 would be a good place to identify suitable take profit should you have any long dollar franc positions. Right, let's see if we can use any of the Fibonacci retracements to help us find the extension levels. Right, I'm going to start this retracement from here on this 1st of March, this high on the 1st of March, ending with the low on the 8th of March. I'm going to use the extension levels. The key extension levels are at 127 and 161%. So let's see where they are. All right, so price has clearly broken above 127%. Next up is 161, so which is right. Like I said, anywhere between 900 all the way to 930 would be a good place to identify a suitable take profit zone. So let's just get rid of 127, keep 161. Right, so anywhere in this zone would be a good place to would be a suitable place to identify a potential take profit zone for any long dollar franc positions. All right, Andreas, there's a question as well. Would it have been smarter or wouldn't you? Yes, you could. Yeah, what you're suggesting is a straddle strategy, right? You have a buy limit and a sell stop as well to see which way because we don't know which way the data is going to come out. So you could have a straddle strategy and then incorporate the buy limit and sell stop. However, sometimes if the volatility is really high, we can get stopped out unnecessary as well. So even though you may have a buy limit, right, and you don't have a very wide stop loss, and in this particular instance, we didn't see any sharp drawdowns. However, in some instances, if the stop loss is too close, you can get stopped out before price reverses and heads in our favor. So yes, a straddle strategy is possible, but we have to identify a suitable stop loss level. And sometimes when we try to keep it too wide, right, it doesn't help as well. So trying to find that sweet spot with regards to identifying a suitable stop loss level can be a little bit tricky at times if you are trying to employ this straddle strategy. But yeah, this is something that you can consider as well. Right. Okay. So let's just go back to the 5 minute time frame. Right. So if we look across at the 5 minute time frame, price did run into a little bit of resistance here. So should we see price break through this level, which is 89.71, right? If it breaks through this current level, then it's quite likely we're going to see this bullish momentum continue. So take note, there is a little bit of resistance here. So after making this pullback, price finding support at around 89.45. And the last few candles based on the 5-minute time frame is starting to edge higher once again. We could see if price does break above 89.71, then we're quite likely to see it trigger the move all the way up towards the take profit zone that I've identified between 89.95 and 90.25. All right. Okay, so this is the current analysis for dollar franc. Right. Okay. Are there any questions with regards to this currency pair? Uh, Otherwise, if not, then we'll move on over to the pound. We'll do our analysis on the pound because we've got the Bank of England coming up in about 3 hours, less than 3 hours, at about 12 p.m. GMT time. We've got the Bank of England coming up, and well, given what the S&B has done, Swiss National Bank has done, I don't know if the Bank of England is going to cut rates as well, but I think they're more likely to keep rates where they currently are, which I believe is around, what is it? I think is it 5%. Bank of England's official cash rate is at 5.25%. Yeah, so 5.25%. I think uh, I don't think they would cut so soon, but you never know. But I think my guess for now is still that the Bank of England is going to keep rates on hold at 5.25%. All right, okay. So if there are no questions with regards to dollar franc, then yep, then let's move on over to the pound, right? British pound, pound dollar. And let's see how this currency pair could potentially react to the Bank of England's monetary policy statement later today. So let's look on the daily time frame first to see, try and establish some of the longer term trends. Right, when I look at the daily time frame, I do see a pretty decent ascending trend line here as well. Right, price has bounced off this ascending trend line several times on the daily time frame here. Just let me try and set this up as closely as possible. Right, so you can see here as well at the end of October 2023, early February 2024, mid-Feb, and early March as well. And of course, just as recently as yesterday and today, oh, sorry, earlier this week rather, we saw price bounce off this ascending trend line as well. So this really tells us that this is a very significant support level, and anytime should price pull back towards this level here, it may help us identify a potential bullish reversal. But that's it, because we've got the Bank of England coming up, and if they turn out to be dovish, if their monetary policy statement turns out to be dovish, that means we could actually see a potential bearish breakout take place. So if the Bank of England statement turns out to be bearish, that or dovish, sorry, if the Bank of England statement turns out to be dovish, that would mean the pound is going to weaken, and that's typically going to cause the pound dollar to drop as well. So we could potentially see a bearish breakout take place, but take note, this is on a daily time frame, right? It's quite a fair distance now. This is about 127.70, and where the breakout could occur is about 127. Still about 60 or 70 odd pips away for that. So just take note that this ascending trend line on the daily time frame is indeed pretty significant as of now. Right. Then also I can also see a descending trend line here. It does seem like price has been capped by this descending trend line. Okay, it's only touched it once here. Let's see how strongly this descending trend line can will be in the future as it plays out. But for now, you can see it does seem to have stalled around this level here at 1.2800. Okay, so this is what I see on the daily time frame. Let's see what else I can do. All right, in terms of resistance, basically this is quite naturally going to be major resistance level here as price made this swing high on the 8th of March. So let's just set this as our first resistance. And first support also is quite clear. There's a pretty strong pullback level here. Of course, we see the wicks of the candle dropping below, but generally 1.2720 does look like a pretty strong support level on the daily time frame. Right, okay, and I can also do run a Fibonacci retracement from here, from this swing high here on the 14th of July 2023, ending with the swing low here, 4th of October 2023. Let's see which Fibonacci levels line up with our first resistance. Should there be any? I reckon there should be. All right, we do have the 78.6%, which is quite close. So let's just keep the 78.6% Fibonacci retracement. Okay, what about on this part of the move? Let's see on the uptrend, we can draw Fibonacci retracement from here, 5th of February till the high here, 8th of March. Let's pull up all the fibs. Right, we've got the 50% Fibonacci retracement aligned pretty well to the first support. So let's just keep 50% for now, right? Okay, let's just keep 50%. And I'll just highlight this as a zone as well. Right, okay. So I'm on a daily time frame here, so we can see since uh November, early November of last year, the pound has been generally been trending higher, right? Series of higher highs, higher lows, generally speaking. And then we also see a very strong ascending trend line. So that's quite important as well. So this intersection here, where we have the ascending trend line, the 50% Fibonacci retracement, and this pullback support level at 1.2720 to 1.2700 is indeed going to be a pretty significant support zone for the pound. So should we see the Bank of England turn out to be pretty dovish, that means we could potentially see pound dollar sell off. Then you could use this strong support zone to identify a suitable take profit zone, right? So should we see a dovish statement, which could potentially cause pound dollar to fall, then where would we identify a suitable take profit zone? It would be in the vicinity of this 50% Fibonacci retracement, the ascending trend line, as well as the pullback support at 1.2721. Right, so these are the key levels on the daily time frame. Let's zoom in a little bit onto the 4-hour time frame and try and fine-tune the analysis should we be able to do so. Right, okay, so quite clearly, this can be adjusted as well. I'm going to use the body of the candle here. Well, let's just use the top of the wicks. Yeah, let's just use the top of the wicks here. And of course, the first resistance, I'll have to adjust it a little bit. I'm going to use the body of the candle here. And then also where you can see price running into resistance, there does seem like to be a pretty strong pullback or overlap level here. Right, so on the 4-hour time frame, I actually see a little another resistance levels that's a little bit closer. So for 4-hour analysis, I'm going to adjust the levels a little, or labeling a little bit. First resistance at 1.2863 is now going to be the second resistance. And this overlap resistance at 1.2806 is going to be my first resistance. Now, why is this an overlap resistance here? As you can see, as price pulled back on 11th March, it found decent support here for about half a day to retrace a little bit higher before dropping. So we had a decent pullback support here for a small period of time. And then as price broke under, it retraced a little bit higher. It ran into resistance around this area. Of course, we can see the top of the wicks climbing above 1.2806, but generally the body of the candle did not close above it. So this creates an overlap resistance. This overlap resistance also intersects nicely with the descending trend line as well, highlighting another resistance point. So do take note, this first resistance at 1.2806 is pretty significant for the pound. Right, similarly, for the first support, now that we fine-tune the analysis, now that we zoom in onto the 4-hour time frame, I can adjust the first support. Here, first support is going to be here at 1.2689, right? And we have the 50% Fibonacci retracement as well over here. Let's see, there's 61, perhaps that can be used as well. No, 61 simply too far, right? Right, so for on the 4-hour time frame, I'm just fine-tuning the analysis a little bit. Let's see about the ascending trend line. Okay, this ascending trend line, I can probably adjust it as well. Okay, let's just get rid of this one here. I'm just going to draw an ascending trend line based on the 4-hour time frame over here. And this is still a pretty decent ascending trend line on the 4-hour time frame, right? So you can see price has bounced off this level several times, right? 15th of February, 16th, end of Feb, early March, as well as at the beginning of this week as well, Tuesday, and of course yesterday, Wednesday as well. So you can see price has bounced off this ascending trend line several times, and if many of you are able to notice, we do see a symmetrical triangle pattern being formed here, right? We can see a symmetrical triangle pattern being formed. So usually symmetrical triangle patterns would mean that price is going to consolidate over closer, and then it's going to break out either to the upside or downside. And what's going to be a potential catalyst is the Bank of England later today. So the Bank of England is definitely going to drive the pound out of this symmetrical triangle chart pattern. Whether it's going to drive it up or down, nobody knows for sure. But if it does happen, you can use these levels here to identify potential bullish breakout opportunities as well as a potential bearish breakout opportunity as well. So since the Bank of England is gonna come up with their announcement in about 2.5 hours, right, at 12 p.m. GMT time, perhaps I'm not sure how much further pound dollar is going to drop or move, but take note, I do see a symmetrical triangle chart pattern here, and that usually signifies a potential bullish breakout opportunity or a bearish breakout opportunity, right? Depending on how the statement is going to be constructed later on. All right, okay. So these are the levels for the pound. I can also, all right. So let's just say hypothetically this first support doesn't hold, right? This intersection of the ascending trend line, the pullback support, and the 50% Fibonacci retracement. If this doesn't hold, where can we identify the next support level? But I do see a nice pullback support here at 1.2610. We can see price bouncing off this level on 21st of February, 29th of February, and at the beginning of March as well. It's also a level that intersects with the ascending trend line. So second support for the pound is going to be at 1.2611. Right. Is there 78.6% that we could use? Well, it's around there, it's around the vicinity, not exactly, but yeah, I think I'll just keep it on just to get a sense of how strong this support level could be. All right, so second support is at 1.2611, first support at 1.2689. We have the 78.6% Fibonacci retracement within the vicinity of the second support, and we've got the 50% Fibonacci retracement in the vicinity of the first support here. Right, first resistance, second resistance, no change. I can probably do one more Fibonacci retracement. That's from here, 8th of March, this swing high here on the 8th of March, going down to the swing low here on the 19th. I believe there may be a 61.8% that we could use. Yes, the 61.8% Fibonacci retracement aligns exactly in line with the overlap resistance, which is first resistance. Right, okay, so here we go. I think this is, yeah, pretty much, okay, maybe I can just do one more Fibonacci projection. Projection involves 3 points. So the first point is going to be starting from here, 14th of March going down to 0.2, 19th of March going up to back to 0.3, which is the 21st of March. Projection levels, the key projection levels are at 61.8%, 78.6%, and 100%. They help us to identify where price could potentially move towards, right? So in this case, 1.123. So we're now expecting price to fall. So if pound dollar continues to fall, we can then use the 61.8 and 78.6% to help us identify a suitable zone where price could fall towards. So you can see 61.8% Fibonacci projection aligns exactly with the 50% retracement here. And the 78.6% Fibonacci projection aligns very well with the pullback support level at 1.2689. So naturally, we're going to keep 61 and 78.6, and we don't need 100 right now. Right. So you can see that first support is indeed a pretty significant zone here, because we've got several factors, right? We've got a ascending trend line, we've got a pullback support, we've got Fibonacci retracements, we've got Fibonacci projections. All right, okay, so these are the key levels for the pound dollar, right? Since we've also got unemployment claims, let's switch our analysis over to the dollar index. Right, here we are. Right, so once again, let's start the analysis on the daily time frame first to try and capture the longer term trends. Right, so since mid-February, the dollar was selling off quite strongly, so dollar index naturally was falling. And then we had a combination of stronger than expected data, starting with the NFPs on the 8th of March. We had stronger than expected NFP data, which pushed up demand for the dollar. Then we also had uh, strong hot CPI data that came in on Tuesday, 12th of March, followed by another set of stronger than expected PPI data as well. So we had three sets of data beginning from 8th of March till the 14th of March, which helped to stabilize the dollar index and then push it much higher all the way till yesterday when we had the FOMC meeting, or rather we had the outcome of the FOMC meeting, right? So we saw at this meeting the statement to be somewhat neutral. However, Chairman Powell came out to be pretty dovish during his press conference, which caused demand for the dollar to drop off. So that means dollar weakened quite significantly overnight, and naturally you could see dollar index right going from as high as 104.15, dropping to as low as 103.40 yesterday. And today it did continue to slide lower as well, dropping towards 103.15, but it has reversed to bounce quite or rebound quite strongly. Right. Now when I look at longer term trends, right, I do see even from here perhaps, yeah, there is a pretty decent descending trend line that I can capture all the way from the top here in October, November, right? You can see price running the resistance here. Oh, well, starting this would be the starting point because I'm not actually capturing this part here. So this is the starting point, but you can see price ran into resistance here at 104.87 and does seem to have run into resistance overnight as well at 104.15, right? Which is so far we do see this descending trend line to be pretty important as it does seem to be keeping prices restricted below the trend line itself. Right, okay, so this is what I see here. And on the support side, there is a case for an ascending trend line here as well. Right, so once again, we do see a symmetrical triangle chart pattern. And once again, dollar index is probably just waiting for the next major catalyst to either push it higher for potential bullish breakout or drive it lower for potential bearish breakout, right? So once again, you can see a symmetrical chart pattern, symmetrical triangle chart pattern being developed as well on the dollar index when we look at it on the daily time frame. Right, okay, now what about Fibonacci levels, resistance levels? Okay, quite clearly this pullback level here is where the first resistance is going to be identified, right? Of course, the top of the wicks went as high as 104.15, but I'm just going to use the body of the candle for now so we can see the first resistance is at 103.84. Second resistance, whether should I take this level here? Okay, maybe I'll take this swing high that occurred in mid-February as the second resistance. And perhaps, yeah, this is probably better as first resistance on the daily time frame, and then I'll probably use this as an intermediate resistance here. Right, take note, we are starting the analysis on the daily time frame, and then we'll zoom in over to the 4-hour time frame and fine tune the levels should it be required. All right, okay. So in terms of support, this is a pretty decent support level here at 102.72. Right, if I drag it across all the way here, we can see that this is also a pretty strong overlap. Right, price finding strong support here on 29th of November at 102.65. Then when it broke underneath it, it actually faced resistance uh for over a period of time from 18 December all the way till mid-Jan, right? Price failed to break above 102.65, thus creating an overlap resistance. Then of course, as price broke above it and then returned here and bounced off again, it creates an overlap support. So you can see the level at 102.65 is indeed a very significant support level here. And on the second support, right, it's simply going to be the swing low here that occurred at the end of December, right, which is of course very far right? It's quite a well distance away from the first support, but this is what I see on the daily time frame. But we can perhaps probably fine tune the analysis. Actually, I don't have to go down that far. Actually, this is a pretty decent pullback support level here. Actually, you can see prices bounced off this level at 102.14 for nearly a week, right? From what is this, 4th of Jan till the 12th of Jan. Yeah, so for almost a period of nearly a week, right? 7 trading days, about 5 to 6 trading days before bouncing higher. So I don't think we have to take the swing low for now as a second support. I think this level here at 102.14 is going to be pretty significant as well. All right, okay. And what about Fibonacci retracements, right? We can also run a couple of retracements. The first one is going to be this big retracement from up here. 3rd of October, swing high from 3rd of October, going down to the swing low here, 28th of December. You can see that the second resistance, which is the swing high that occurred in mid-Feb, aligns pretty well with the 61.8% Fibonacci retracement. So let's keep that on, of course. Another place where I could draw Fibonacci another retracement would be from here, this swing low at the end of December, going up to this swing high in mid-Feb. Let's pull up all the fibs, sorry. Let's see if they line up. Right, we can see 50 and 61 pretty well, all right. Although, yeah, price has hit the 50% Fibonacci retracement, but it does seem to have bounced off. So I'm just inclined to keep it on. And 61 aligns quite close to where the second support has been identified as well. So let's just keep 50 and 61. I'm just going to highlight this as a zone. And this as well here. Right, okay. Let's see what else. There's even a projection I can run. This projection is going to start from here. This high on 14th of February down to 0.2, 8th of March, ending with 0.3 on the 20th of March. You can see that the 61.8 projection and 78.8 percent projection aligned very well with the first and second support as well. So should price continue to drop lower, of course, the current daily candle shows price moving higher. However, if price does reverse and drop lower, 61 and 78.6% also aligned very well, respectively, with the 50 and 61% retracements. All right, so this is what I see on the dollar index. These are the significant support and resistance levels on the daily time frame. Right, let's move on over to the 4-hour time frame and see if we can fine tune the analysis. Right, I think right, I think the first and second support is fine. First, second resistance is also acceptable. I could probably, what's this? Oh yes, this was my intermediate resistance on the daily time frame, right? Intermediate resistance on the daily time frame here. All right, so I can find adjust this a little bit better, right? So I'm going to adjust this a little bit better. What I do see on the 4-hour time frame, this could be a pretty decent intermediate resistance level, which is where price does seem to have run into a little bit of resistance here, right? Based on the current 4-hour candle, we saw the dollar index shoot up strongly, but it does seem to have stalled around this level here at 103.63 and started to pull back. Previously, you can see this was a strong support level, price bouncing off 103.63 on 22nd of February, 27th, 29th, and early March as well, before finally going lower. So this level was previously functioning as a pullback support level. And as price started to rise up towards it in mid-March, you can see it ran into a little bit of resistance for about half of a day or a third of a day before finally going higher. So this does look like to be a pretty decent overlap level, which does offer a little bit of resistance as well. Right, in terms of support, is there anything else that I can try and identify? Probably not. This is a projection. Okay, since I'm on the 4-hour time frame, I can run one more Fibonacci retracement. That retracement is going to start from here. 8th of March, going up to the high here on the 20th. Let's see. Right, we do have 50 and 61, so let's just keep that on here. Just in general, it's not the strongest support level, but because price did find decent support here before going higher, it just seems to align well with the 50%, so let's just keep that here, but I'm not inclined to identify it as a major support. It's more of an intermediate support, so I'm going to highlight it with a dotted line. Similarly, for the 61.8% Fibonacci retracement, there does seem to be like a pretty decent support zone between the 50 and 61.8% Fibonacci retracement levels here. So this is more of an intermediate support zone rather than an outright uh major first support. All right, okay. Right, okay. Are there any questions? Can you all right, sure, Andreas. Yeah, let's move on over to dollar cat for sure. Right. If if any of you have requests for any analysis on the commodities or any other currency pairs or even the indices, please do let me know early. Right. Do not wait till the end of the webinar to drop your request in. I do not wish to rush through any analysis. So do drop them in, drop your request in early, and I'll be more than happy to go through the analysis with you. All right, Andreas, let's switch on over to dollar cat. All right, so dollar cat here once again, we'll start on a daily time frame, trying to establish where the what sort of trend is it? Can we identify any major trends? Generally, we're looking at a daily time frame since mid-Feb. We can sort of argue that dollar cat has been trading sideways, right? Going from trading from as low as 134.55 to as high as 1.3596, or basically 1.3600, right? So generally, if I were to just highlight it like this, right? You can see that since middle of February, the, is there's no clear bearish trend as we saw at the end of November and December 2023. And clearly there's no strong bullish trend that we saw in the beginning, or rather in the first 8 weeks of January, right? And the first 8 weeks of 2024. Right. So what we're trying to do is when we start our analysis on the daily time frames, we try and identify major or obvious um trends. So you can see clearly here, August 2023 to September 2023 was a strong bullish trend. Then we had a corrective phase here, 8th of September till the end of September. So for over a period of 3 weeks, there was a corrective phase for dollar CAD before resuming the uptrend again. Similarly, we can also see a very strong bearish uh, downtrend that occurred at the beginning of November all the way till the beginning of January this year, right? So what we're trying to do is try and establish I'll be able to identify the major trends. So what I see now for dollar cat, although it is a pretty wide range, right, between 134.50 basically the 13600. So basically it's been trading within a range of 150 pips, but right now it is experiencing or it is involved in range bound trading, right? It's just trading sideways for over a period of now coming to almost seven weeks, right? So yeah, there's no major bullish uptrend or downtrend. It's just sideways trading. So because of that, then we can quite easily identify the major resistance and support levels, right? Going back here all the way till 8th of December, we can see quite clearly this is the first resistance at 1.3598, right? You can just see set it as 1.3600. That's where the first major resistance is. And first support on the daily time frame is this pullback support level here at 1.3447. So these are the major support and resistance levels for dollar cat. So as it got rejected at the first resistance on Tuesday and on Wednesday again, it gives us a fairly good uh, signal that we should be shorting the dollar cat, right? As you can see, this first resistance at 1.3600 is indeed a very significant level. It's a very strong barrier. So as price gets rejected off this level and starts to reverse and drop lower, it helps us identify a potential bearish or helps us identify a potential short opportunity for dollar cat. Similarly, and as it's falling towards the first support helps us to identify a suitable take profit as well, right? So I wouldn't set my take profit at exactly the first support at 1.3447. Perhaps I'll set it a little bit higher because you can see here price doesn't always bounce off the first support exactly. It comes quite close to it. So in this case, it comes to as close as about 25 pips away from the first support before reversing to go higher. Right. So anytime it comes within 1.3470 after reversing from the first resistance, right? That's a pretty good area to identify as a suitable take profit zone. Right. Similarly, as price bounces off uh the first support and reverses to go higher, perhaps tomorrow and maybe next week, we see dollar CAD continuing to trade sideways. Right, and as it goes up, we can probably identify a potential long opportunity, and then where we can target a suitable take profit would be anywhere between like 135.80 onwards, right? 135.80 onwards would be probably 135.65 to 135.80 would probably be a good area to identify suitable take profit zone for any long dollar CAD positions over the next few trading days, right? Should the opportunity arise. So by identifying major resistance and support levels, we can play the ranges, right? We can play the bounce of the first support, go long, target a suitable take profit within the vicinity of the first resistance. Similarly, as price gets rejected at the first resistance and reverses to drop lower, it helps us to identify a suitable short entry. And then similarly, we would use the vicinity of the first support to help us identify a suitable take profit, right? Okay, so now let's also run a Fibonacci retracement of this big move here, down move here that started on 10th November till 21st December, right? We can see 61% right line up exactly with the first resistance is there, the 78% that we could use. 78.6% is pretty much in no man's land, so let's just keep 61. Right, and if price were to break out of this first resistance, where it could potentially run into resistance. Maybe a little bit of resistance would be around here. This pullback support level here that occurred on 3rd of November, 1.3657. This could be a potential support, next resistance level here, right? You saw it found decent support here on a strong support here on 3rd of November, pretty decent support on the 6th, and once again bouncing on this level on the 15th of November as well. So this was a pretty strong pullback support level and now could potentially function as resistance. Right, for second support, I would use this pullback level here that occurred on 1st of February, the 2nd of Feb at 1.3385. All right, I think there's another Fibonacci retracement we could potentially draw. Right, it's going to start from here, this swing low 27th of December, going up to this high here on 19th of March. I believe it should be the 38 and 50. Let's see. Right, we've got a 38 and 50 aligned very well with the first and second support. So right, so let's just keep these two on. Okay, so these are the major support and resistance levels for dollar CAD on the daily time frame. Take note, it's been trading sideways since the beginning of February between 1.3450, right, and about 1.3600. Now let's move on over to the zoom in over into the 4-hour time frame and try and fine tune the analysis. Should that be an opportunity? All right, Andreas, you've got a question. Or we got statement 13 will be announced at the same time. Right, next Thursday, what do we have? Hang on, let me see. Okay, let me pull up the calendar on Forex Factory. Let me see what we get. Next Thursday. Oh, right. Okay, we've got US GDP. Oh, yeah, right. We've got GDP data out of the US and Canada. Right, yeah. This is definitely going to be yeah, pretty volatile period for dollar CAD, right? Particularly you've got Canadian GDP data, US GDP data, as well as US unemployment claims and Chicago PMI. You've also got pending home sales, right? So yeah, right? Because from between now and next week, right? Of course, it's 6 trading days basically, or well, 5 full trading days, right? Because I think as we begin the new week and you approach Wednesday and Thursday, you get a better indication of whether this range bound trade is going to, or this range bound activity is going to continue for dollar cat. And then once you're able to see what sort of bias is exhibiting, is it going to continue to exhibit a neutral bias as what we're currently seeing? Then you can try and structure a trade and play off the support and resistance levels, or however, should that be a major bearish channel or bullish channel, then you can also adjust your analysis accordingly. Frankly speaking, it's a bit too far now, and GDP data, I think the US data might override the Canadian data. We may get a better set of data out of the US. So that would potentially mean demand for the dollar is going to be stronger than the Canadian dollars, stronger than the loonie. So it's quite likely next week on Thursday, 28th March, it's definitely going to be a high volatile period for dollar cat. But I think we are going to see, I think it's going to be more in favor of the US dollar. So I think we are likely to see dollar cat potentially rise next Thursday during this particular data release. Right, like I said, it's a little bit too far to see how or where the significant levels are going to be, right? When we come to next week, Wednesday, you know, the current resistance and support levels that we have identified may not be valid. So it's kind of hard to structure a trade based on next week. But I would say currently, what I'm more confident of is the sideways activity that's currently going on. So playing the ranges here, like so as price reacts off the first resistance and starts to reverse and drop lower, it helps to identify a potential short entry. Similarly, as price bounces off the first support and starts to reverse to go higher, it helps to identify a suitable long opportunity as well. All right, okay. So that was I saying. Okay, let's go back into the 4 hour time frame. Let's see if we can fine tune the analysis. No, probably not. I think I'll just keep it as it is. I think this is pretty much fine. If anything, I'll just bring this up here. But apart from that, I think everything else is pretty fine. First support. Okay, I'll fine tune it a little bit here on the 4 hour time frame. Similarly for this over here as well. Right. Okay. So no real major changes to the first support, second support, first resistance, and second resistance. Right? Just a little minor fine tuning, but apart from that, everything else seems pretty intact. So even on the 4 hour time frame, we can see quite clearly, right? This is a pretty strong channel, right? Sideways channel. This is a strong sideways channel. So even here on 22nd of February, as price bounced off the first support here, you can see here it found support 3 times, 9th of Feb, 12th, and the 13th. And as price bounces off this level once more, it does help us to identify a potential long opportunity. In this case, let's just say hypothetically, we got it at 134.60. It climbed as high as 135.10, so probably a 40 to 50 pip move for intraday short-term trade is not too bad. And if you are holding it all the way towards as price reaches the first resistance, right? Of course, there's a pullback here that occurred on the 23rd of Feb, another pullback here on 27th of Feb. But hypothetically, if you got it in at about 1.3460 and take it up close to about 1.3590, right? You can see that's almost a 130 pip move in a period of a week or so, right? About 5 trading days, right? About 4 to 5 trading days. So by identifying the major resistance and support, we're able to play the ranges. Right here is a little bit more difficult, right? It took a while before prices finally reversed and dropped lower, but when it finally did, right, you can even go from 135.80. You don't have to go all the way down 134.60. That's another 100 to 120 pips potential opportunity as well, right? So for now, I would say take note of the sideways channel and see whether its price could going to continue trading in this manner as we begin as next week starts, and how it actually plays out as you approach Thursday for the GDP data. All right, okay. So I've come towards the end of today's webinar. Right, so before I end, I'm gonna launch a poll as well. I really appreciate it if you guys can give your feedback with regards to today's webinar. And do take note of the upcoming n- data releases for tonight. We've got Bank of England coming up at 12 p.m. GMT time, and we've also got unemployment claims out of the US at 12:30, basically half an hour later, 12:30 p.m. GMT. All right. Thanks everyone for tuning in. Hope this has been a great session for all of you. And do look out for all upcoming webinars by IronFX, and I look forward to seeing all of you at the next one. All right. Take care, everyone. And I wish you all the best in your trading journey. And yep, hope to see all of you soon. All right. Take care. All right. Thanks, Andreas.